Welcome to our weekly Forex forecast, and this is for trading for the week of May 11th to the 15th. Before I go on, for all my female traders with kids, happy Mother's Day. Let's dive in. First, a quick disclaimer here. This is for educational purposes only. Trading is a risky business, so please be careful with your money. Especially right now, there's a lot of volatility in the market, so we have to be very careful. We'll start as usual with our calendar here. So coming up here, we have business confidence numbers here from New Zealand. So last week we saw that the data that came out of China as well as Australia was quite positive. Actually, it beat expectations. So as a result of that, we have seen an uplift in Australian dollar as well as New Zealand dollar. So overall commodity currencies. And also just a quick overview of what's going on in the market. We have seen a shift in the risk sentiment. So last week or before last week, there was a risk off market sentiment, which means the investors were concerned because US and China were at each other, and there were concerns in regards to the trade agreement. There were also concerns because US was blaming China for mishandling the virus early on, and then China was of course blaming US for mishandling their own to basically how they took care of it, handling of the situation. But last week here, what we saw was a risk on sentiment again. So which means that investors are now more willing to take risks. And the reason for that was one, US and China, they held a call, and China has basically agreed to honor the trade deal that happened prior to this whole coronavirus thing. And also we heard that before President Trump was blaming China, but last week in an interview, he said that it wasn't really China's fault in terms of, or they did a good job, something like that. Basically, he was saying that China's not to blame for releasing the virus. It was not their fault. So that seems to have shifted things along. So now anytime there is a political risk in the market, that is bad for the equities markets. We saw that equities markets went up. And also we have seen a lot of positive earnings from a lot of tech companies. So Google, Apple, Facebook, all of these have posted positive earnings. Amazon has posted positive earnings. As a result of that, we have seen stock markets go up, especially Nasdaq. Nasdaq is actually trading in a positive territory for this year. So as we can see, even though the economy is not doing that great, but some of these tech companies are doing well because more people are using them. Zoom, for example, is another one who has posted record profits. So all of these, basically it's leading NASDAQ to get pushed up, also with the government literally throwing money at the markets. And another thing that's driving positive risk sentiment in the markets is we have seen plans from different governments around the world as to how they plan on opening up the economies, and all of that is essentially positive for the market. So we're back in risk on environment, and if that continues, we're likely to see the stock markets go up, and we're likely to see dollar crosses and yen crosses go up as well. So back into our news here, we have CPI numbers for US. Actually, back to that, the US non-farm payroll data, we saw over 20 million jobs have been lost. And yet we saw that the markets went up, or the stock markets went up on that, because the expected number was, I believe it was 22 million, and we only saw 20.5 million job losses. So markets saw that as a positive, and we saw the equity markets went up, and dollar crosses as well as yen crosses went up as a result of that. Now we do need to be careful a bit here because really it's just positivity in the market in terms of expectation. So things can change because of, well, with all this positivity, I don't really think there's enough supporting the markets. But then again, stock markets are different than the economy. Stock markets will move on expectations, whereas the economic data may not translate into that. So the CPI numbers here, so we saw that with the with payroll numbers that came in better than expected, we saw stock market went up. And if we see these numbers are come in better than expected, we're likely to see the stock market go up. US dollar may not go up as much. And same thing we saw for Chinese data as well. When the Chinese data came out, the markets went up because China was one of the first places to be hit with the virus. And what basically the data is showing that even though the economy was hit, now that after things got opened up, things were good. And I'm not sure if that's a true reflection of how things are, but as a result of that, the stocks went up. And what we're seeing basically is any kind of positive data is translating into stocks going up, which means our yen crosses are likely to go up with that. And then, so if this number comes in better than expected, we're likely to see the stock markets and yen crosses go up as a result. Now, we also have cash rate statement here for Reserve Bank of New Zealand, as well as the monetary policy statement. We saw Bank of England, when they came out with their monetary policy statement, essentially they kept it the same, and we saw our British pound go up. Also with the Reserve Bank of Australia, they kept their monetary policy the same, and we saw Australian dollar go up. So if Reserve Bank of New Zealand does the same thing, so they keep the monetary policy the same, we could see New Zealand dollar go up as well. So just keep that in mind. Basically, what we are looking for is a couple of things here. One will be the forecast for the economy. What kind of GDP numbers are they expecting, or growth numbers they're expecting, as well as what are their views on opening up the economy. So if those two are positive, we're likely to see New Zealand dollar go up as a result of that. Now we have preliminary GDP numbers for UK here. It is expected to drop, which is normal under current circumstances. Now, if the loss is bigger than this, then we are likely to see a negative impact on British pound. So keep that in mind. We also have PPI numbers here, and then we have Fed Chair Powell speaking as well. So far, Fed has been saying that they are willing to provide full support to the markets, and they have been doing that. So if they talk about, at this point, not really expecting an interest rate cuts because they're fairly low as it is, but if they keep reiterating their stance of providing all the support that the market needs without any sort of concerns in regards to how much that would be, that will be positive for the stock markets, not so much for US dollar though. And then we have employment numbers for Australia, as well as the budget release here. So with the unemployment rate here, it is expected to grow. Now, having said that, though, if the number is, let's say, 8% or 7.5%, that will be considered a positive number, even though it is increasing. But if it's not as bad as what the market was expecting, we're likely to see Australian dollar go up. And then for the budget here, basically the main thing to watch out for would be how much is the government willing to support the economy in getting things back on track. So if we see that the government is showing a lot of support for the economy, or allocating funds to growing the economy again, that will be positive for New Zealand dollar. We have Bank of England, Governor Bailey speaking here. I don't expect anything to change. Now, having said that though, if they did say actually last time that they are likely to increase the asset purchases in coming month here, June, but should they announce that sooner than that, or if they announce any kind of a stimulus package or broadening of the stimulus package prior to that, then that would be negative for British pound, but positive for the stock market. So keep that in mind. Unemployment claims here, this one, as we can see, they have been growing over the last little bit here. that's what we're expecting. Again, we're expecting the number to grow. Now, if this number comes in at like 600,000, for example, that will be negative. But if it's within this range, I think at this point, everybody expects it. So I wouldn't really expect too much of a market move based on that. And then we have Governor Poloz here for Bank of Canada. Bank of Canada right now is also holding steady, as we know, and they have been talking about supporting the markets as well, and they've been doing that. So if everything stays the same, I would not expect too much of a change here. And then we have preliminary GDP numbers here out of Germany. Now, GDP is expected to drop, or the numbers are expected to drop because everything is closed right now. But if the number is worse than expected, then we're likely to see a drop in euro here. And of course, we have core retail sales for the US. Again, it is expected to be a negative number, or both of these numbers are expected to be negative like they were last time. The only problem will be if they are worse than expected, then we're likely to see stock markets drop here, because retail sales are very important. So if retail sales start showing that the numbers are not quite there, then that will be negative for the stock markets. Now, another thing that we really need to focus on here would be the opening up of the economy. So we are seeing different countries have talked about their plans on opening up, as well as US. In the US, though, we are seeing an increase in the number of cases as well as the number of deaths. So as we see the economy opening up, and this, of course, applies to the US, but also around the world, as the different countries start opening up, if the number of cases goes up and number of deaths go up, that would be negative for the stock market. So that's something we need to keep in mind. And on Friday here, we also have consumer sentiment numbers here. Last time they came in better than expected. Anytime the numbers are coming in better than expected, it is positive for the stock markets, which means our positive for the yen crosses as well as the dollar crosses. So that is it in terms of our news. Let's move on to our charts now. Okay, so we'll start off by taking a look at, not here, euro dollar. With euro dollar here, euro dollar has been interesting. It's been trading in this range here for some time now. So this week's candle close here was bearish. And actually, if we take a look at the daily here, daily, we do have a bit of a pin bar. So price is into resistance here at 1.0880 level, around that. From a weekly perspective, we do have a bearish candle close here. Now, if the data comes in positive, this one could go back up. So right now, I'm neutral on this. Price is still trading in a range. At this point, I would be looking for price to retest the bottom. If it holds above, I'm looking for it to reverse and go back towards the top of the range. So right now, because it's a range bound move, I'm expecting market to stay range bound, and then perhaps just bounce off of the bottom and go back in towards the top of the range into 1.1020. So right now, neutral bias for our euro dollar. This is a range I'm expecting it to trade in. Pound here, pound has been interesting. We have seen price bounce up and down. This one has also been range bound. If you take a look at the daily, we see that price has bounced off of the bottom of this range, and this is the range that price has been trading in. It went into the high and then reversed from there. Now it went into the low and has bounced off from there. At this point, I am essentially looking to see how price reacts, because there's a large pin. See how when there was a pin here or wick in the bottom, we saw price go up. So we could see a similar behavior here as well. But for now, my bias is neutral because price is trading in this range and I'm expecting it to stay within this range. So we could get this type of a move where price goes back and forth and becomes range bound here. So right now, a bias is a neutral. In terms of the move, I would look for a move back towards the top of the range here, 1.25 and then 1.2650. Those will be the two targets here for pound dollar, but bias is neutral as well. I think we're likely to see a further move to the upside towards the top of the range here. Aussie dollar here. Aussie dollar has been very strong. We did have a nice bearish, or I should say just a pen bar here. However, the risk sentiment has changed. So right now we really need to pay attention to the risk sentiment, which means we need to pay attention to what's going on with the stock markets because we are seeing a big impact as a result of risk on, risk off environment, and stock markets are a good way to show which way the risk is going. Right now, we do see a bullish candle close, so bias is bullish. Now, keep in mind though, price has not gone through the top of this yet. So what could happen is we could see price go higher, and once it gets into 0.6570, we could see price turn back around and become more range bound. So that's something to be mindful of. This is the caution that we will have to apply. But for now, bias is bullish. Once the price gets through the high here, next target is 0.6700, which is back into this resistance level. So in terms of a move, we could get a bit of a drop here before it continues forward. So I would look for a bit of a pullback and then a further move to the upside. Just keep in mind that this resistance at 0.6570 is very important. If it doesn't go through, we could see a move back down. But as we can see here, this big drop here that happened, that's gone completely. So looks like the markets are feeling in a very risk-on type mode, that they're feeling very enthusiastic about what's going on. We'll have to keep an eye on that. The problem with this enthusiasm is that it's not based on actual real facts, it's based on sentiment. And sentiment can reverse very, very rapidly. So just keep an eye out on what kind of news is coming out, also what kind of comments are coming out, because if, let's say, for example, US and China start to fight once again, that will be a risk negative thing, and we're likely to see this drop. So just be mindful of that. For now, bias is bullish here, and I am looking for a further move to the upside. New Zealand dollar has also been very strong, as we can see. And same thing here, we had a pen bar previously, but the risk has turned around. The risk sentiment has turned around. Now we have a bullish candle close. Again, this one hasn't taken out the resistance yet. However, as we can see, it has been maintaining that positive bias here. It's making higher lows here. So as a result of that, we are okay, as a result of that, we are seeing price go up here. So bias is bullish here, and I am looking for essentially maybe not that much of a pullback. Basically, I'm looking for a pullback and then a further move to the upside here. And in terms of the targets, the first target here is 61.80, and then the next target here is 0.6250. So bias is bullish here, similar to what we were looking for with Australian dollar, bit of a pullback potentially into 6100 or maybe even a little bit lower, and then a further move up. And then we hit a solid resistance here, support, which could turn into resistance. So keep that in mind. But right now, bias is bullish. First target is 0.6180. And then 0.6250 is the second target for New Zealand dollar. Dollar CAD here, this one is looking bearish. As we can see, price has been making lower highs and we have seen a drop here. So bias is bearish for this one. And in terms of our pullback, with the Canadian dollar here, we have seen oil go up, and as a result of oil going up, we do tend to see Canadian dollar go up, which means dollar CAD drops. So bias here is bearish. First target is 1.3850, and keep in mind this is a strong support here. If it doesn't break, which it didn't last time, then it can go back up towards the top of this range here. So that's the caution. Now, once it goes through this, though, next target is 1.3735. So first target is 1.3850, then 1.3735. On the flip side, though, if it goes through it, if it holds above, then we're likely to see a move back towards the top of the range. So for the last 4 weeks, this is where the price has been stuck. In that case, I will look for a move back up. But for now, looking for a drop into that, and only if it goes through that to the next level here. So bearish bias for dollar CAD. Euro pound here, this one has gone back and forth. Price is still stuck in our range here. This is the range. As we saw, price dropped, but there's a long wick in the bottom, just like this one here. So we could see a reversal here. So we could see a bit of a pullback, and then price could go back up. So this one is range bound at this point as well. So overall bias is neutral, looking for price to essentially trade within a range like this. So neutral bias for euro pound. I'm looking for retest potentially of 0.8670, and if it holds above, I'm looking for price to go back up towards 0.8820. Euro Swiss franc here, this one is interesting. We have seen a drop here. With Swiss franc, though, we have to be cautious because the price is pushing lower here. We could see Swiss National Bank intervene in the market. They are notorious for doing this. Now Bank of Japan does this as well, but Swiss National Bank is by far the worst in terms of interference in the market. So they may come and sell Swiss franc, which means the value of Swiss franc would drop, which means euro Swiss franc is likely to go up under that scenario. For now, though, it is bearish, but I would be careful of the support level at 1.05. If it holds above the support level, like it has in the last 4 weeks here, then I will look for a move back into the range, potentially towards 1.06. So right now it's bearish, but with caution. So should by chance it drop through the support level, next target is 1.0480 and then 1.0420. But I'd be careful of the support. If it doesn't go through, I'm looking for a turnaround. Pound Swiss franc here, this one, it's an interesting candle. We have a neutral candle close for the week. And as we can see, this one has been sideways here for several weeks now. So the overall range that price has been trading in has been between 1.1880 and then 1.22. So this is where we are. And the immediate range here is 1.1960 and 1.2120. At this point, it's completely neutral. So basically what I'm looking for here is, as long as price holds below 1.22, I'm still neutral because it can still do this. So right now, this is range bound, so bias is neutral. But once, let's say, if it does break through the support, then we could see it come all the way to the bottom. On the flip side, though, once it closes through the high, we also have a long way to go. And this inefficient move here has not been filled. So the bottom half has been filled now. The top half has not been filled, which means it could take off like this one has taken off. And the longer price gets stuck somewhere, the bigger the move. So keep that in mind. We could see it go all the way up if it breaks through the high. But for now, bias is neutral. I'm looking to see which direction it wants to break out into. Dollar Swiss franc here, this one has also been range bound. As we can see, for last several weeks here, price has been struggling into the resistance as well as into the support here. So completely neutral bias here. We have a long wick and we have half of the candle is green. So at this point, I am neutral on this. What I'm looking for here is, and as we can see from so many different pairs being neutral, market is waiting. Market is waiting to see how things play out. So now that the US and China risk is behind us, at least for the time being, now the focus will be on opening up of the economy. So if coronavirus cases start going up, then we're likely to see this one be impacted by that, or all these crosses will be impacted by that. Right now, market seems to be in the wait and see mode. So for now, neutral bias, and this is the type of move I'm looking for here as well for dollar Swiss franc. Pound yen here, this one, we see that price had dropped right into this 130.50 level, which is the support level coming here. Now, the problem is we have a long wick in the bottom. So if you take a look at our daily, we see that daily has been going up. So this is, it's come back into this range. And now I would look for a further move to the upside here based on the daily. So the large wick in the bottom shows that price is rejecting the lower level. So it can go in the opposite direction here. So for now, bias is bullish with this one. We'll see how price reacts into 132. If it holds above, I will look for a move back towards the top of this range now. It tried to get out of the range, couldn't maintain the move out of the range. Now we're looking for a move back towards the top of the range. So bias here is bullish. First target is 133.50 and then 135.50. So bullish bias for pound yen. Euro yen here, this one we see that price did break through the support and then it has turned around. And here, if you take a look at the daily, we see there was a big drop here for several days and now price is pulling back. Now we do have a bullish candle close right into the resistance though. So the caution here would be if it doesn't go through the resistance here at 115.65-ish area, then we could see price drop from there. So for now, I would watch out for this resistance at 115.65. And if you go back to the daily, weekly here, we see a large rejection, which means price is likely to go back up. So bias is bullish. Target will be 117.35. So bullish bias here for Euro yen. There was a question in regards to trading the ranges. Is it worth trading the ranges, or is it better to wait for the breakout? I would say ranges can be traded and they can be traded quite profitably as well. We just have to keep in mind the support and resistance level. So if we see that price goes into the bottom of our range, instead of going short on it at the bottom, I would just be careful and I would keep an eye on what happens at the support level. So if it turns around there, then that would give us an opportunity to go higher. But I would be cautious because sometimes it will look like it's about to break and then it turns around, and vice versa, where it looks like, oh, it's just going to hold and turn around, but then it breaks after. So trading the top or bottom of the range can be, can be risky. So once we see that price is turned around, then it's worthwhile going in the opposite direction. So yes, they can be traded, just be cautious. Okay, so this one here, dollar yen also looking bullish here. We see a large rejection. If you go to the daily chart here, we see that price has gone back again into this range. It had broken out. Now we're moving back here. So for now, bias is bullish with this one as well. And the type of move that I would look for would be something like this here. Having said that, though, just keep in mind price is right into the top of the top of this candle here is into resistance. Here, the support can come and become resistance, and if you see, this is where it's coming from. So price has struggled with this level before, and if it doesn't go through, we could see it turn back around. So that's something to be cautious of. For now though, bias is bullish for dollar yen. Aussie yen here, this one has been extremely bullish as well. We see that the candle close for the week is very bullish. Price is held above this support level at 67.60. So it's holding above this support level. And this is also range bound here. And now it's heading towards the top of the range, which is a resistance from back here. And last time price was here, it did turn around. But now we have a strong bullish candle on the weekly, which means we could see price go higher. So in this case, the first target would be 70.20. So bias is bullish. And next target here is 71.50. So bullish bias here for Aussie yen. New Zealand yen, this one as well, as we can see, has been trading in a range. Price has been stuck in this range for some time. It did look like it was going to break to the downside, but it hasn't. It turned around and now we have a bullish candle here. So looking for price to go higher into 66 area here. And this is where we could see price get into resistance level and it could just get stuck here. So I would watch out for that, but bias is bullish. First target would be 66, and if it doesn't break, then I'm looking for a move back down. But should it go through though, then we have more room to the upside. So in this case, bias is bullish. First target is 66, and then second target here is 66.80. So bullish bias for New Zealand yen. CAD yen here, this one's looking bullish as well. As we can see, price went into the support, rejected it, and now we are moving back towards the top of the range. So this is the range price has been trading in here as well. It's been stuck in this range for quite some time. We see that when price came into 78.20, which is the top of the range, so when price came into this level, we see that price turned around. Same thing here, when price came into support, it turned around. So overall bias here is neutral, is bullish, but it's neutral within the larger range. But for now, we are looking for a move back towards the top of the range here. So first target is 77 and then 78.20. So we may get this type of a move here where price becomes a range bound. So for now, bias is bullish for CAD yen. All right, so let's take a look at our commodities now. We'll start off with silver. Silver has done well. Now it did reject the bottom here and we have a large bullish engulfing candle. So we could get a bit of a pullback here into 15.20. And then I would look for a further move to the upside. So as we can see, silver has also been trading in a range here. It's been stuck between 15.80 and then 14.50. So right now we do have a bullish candle close within the range though. So I'm looking for a bit of a pullback and then looking to target the top of the range at 15.80. And then be prepared for that because it could happen. Because we are into the top of the range. So right now, bias is bullish in the short term for silver. Gold here, gold has been trading in a range as we can see. And if you go to the weekly here, we see it's still stuck in a range. The candle close for the week is neutral. So bias is neutral here. With this one here, we have an interesting scenario here. If price stays below, it can turn around, but that will not happen till the stock markets drop. So at this point, everything is in a wait and see mode. So I'm looking for a neutral move here. So neutral bias for gold. And as long as price holds above 1680 or 1670 essentially, then I will look for a move back up towards 1723. So neutral bias for gold. Oil here, for the last 3 days, oil has been staying sideways here, but overall it has been bullish. It is into resistance. So for this one to continue higher, we have to see price go past the resistance of 27.80. So bias is bullish here, but with caution, because it is a strong support resistance area. If it doesn't go through, then it is very, very likely it's going to change if it gets stuck here for another day or two. So watch out for that. Bias is bullish. First target again would be the top of the range, which is 27.80, which is the top of the pin here, right there. And that's what I would be cautious of. But second target here is 32.70. So first target 27.80, then 32.70. So bullish bias here for oil. Copper here, copper has, sorry, this is Bitcoin. Copper here has done quite a turnaround as well. We see that price is almost into the top from where it had first started moving lower. So it looks like market is being very aggressive in terms of expecting a quick recovery. So in the short term, there's no point in fighting it because it is likely to just continue on based on the sentiment. But in the long run, I would not be too keen on going super long in the market and just load up the boat here. I think we could see another move lower, but we'll have to wait and see. It's hard to say anything at this point. For now, though, this one is looking bullish. And on the weekly, we see that price is broken through the resistance here. So this is looking quite bullish. We have a bullish engulfing candle close. So here, bias is bullish. Now watch out for a pullback into 2.33 potentially, and then I would look for a move higher. So bullish bias here. Target is 2.46. So bullish bias for copper. Bitcoin here. Bitcoin, I don't have the latest numbers. So Bitcoin, because of the halving that is coming up, we are seeing a move higher in Bitcoin, and this tends to happen or this happened every time every time it gets halved. So right now, looking very bullish. This is the daily chart. We see that price broke through the resistance level. So on the weekly, this is extremely bullish here. Next target is, I'm going to go back to the daily. So next target here is 10,200. And then above that, we're looking at 10,450. So for now, bias is bullish for Bitcoin. Now, just keep in mind, these numbers do not include the weekend price action. My broker is not open on the weekend, so it doesn't show the numbers here. So just be mindful of that. S&P 500, this one has also been going up. If we take a look at the daily, we see that last week we were expecting a drop. Now it did drop, and then the risk market has completely shifted now, and this is looking very bullish. See how strongly price closed into the high. So that shows that momentum is very much to the upside. So we have to be careful with this one. But bias is bullish, and the reason we have to be careful will be at the top here into 2970. If it doesn't go through, it can go back. So this is the range it's been trading in between 2970 and 2780. So that's the resistance level. So that's first target. But if it does go through that level, then the second target here is 3020. So bias is bullish for S&P 500. Nasdaq here, same thing. Nasdaq has just gone up like crazy. As we can see here, prices actually, this is where we had started seeing that drop here, but price has gone all the way back. It dropped quite a bit, and then it has recovered very, very rapidly. So with all the tech companies, the earnings are coming positive, and this is what's pushing this higher. So on the weekly here, bias is bullish. Let me just move things around here. In terms of the targets, first target is 93.50, and then second target here is 94.50. So bias is bullish, and as we can see here, it's almost into the top here from where the move started. So it's as if this whole issue didn't even happen. So market is completely disregarding it. And I think it may be a little bit over optimistic, but again, in the short term, it's the sentiment that will work. So it's the sentiment that will drive the markets forward. Right now, because the risk sentiment is it's in risk on mode, I'm looking for a further move higher. So targets, like I said, 93.50 and 94.50 for Nasdaq, and it's bullish. And same thing here we are seeing for Dow Jones. We were expecting a drop, and we got that drop initially before market turned around because of the positive comments that were coming out. So keep that in mind, because that can shift again. For now though, bias is bullish here. We may get a pullback into 24,200, and then I will look for a move higher here. So in this case, our targets, the targets will be, first target is 24,600, and then 24,900, which is the top of this range here. So bias is bullish here for Dow Jones. DAX here, DAX also looking very bullish. We did see a drop initially, and now it has turned around. So bias is bullish here. And in terms of our target here, the first target is 11,000. And this is where we see that. So this is our support resistance level. This is where price struggled, and it struggled on the way down, on the way up, and then this is where it bounced off. Or basically this is after the initial drop here. So this is when it had opened and done another drop. But now, as we can see, price is going back towards that level. So if it doesn't make it through 11,000, we can still see it turn around, but more likely than not, we are likely to see a move higher here. So first target is 11,000, second target 11,250 for DAX. And then FTSE here, similar story here as well. We did see a bearish pin bar here. Price dropped, went into the support, and then it has turned since then. So bias is bullish here. And in terms of the target here, first target is 59.80 and then 60.50. And this one could go all the way into 61.70. So just be cautious of that. So bullish bias for FTSE as well. And then we have Nikkei here. Nikkei has turned around quite strongly, and it did, again, initially it dropped, and then with the positive risk sentiment, it has gone up. In terms of the target, it's already into that level. So next target here is 20,480, which is coming up into the resistance level. So bias is bullish. And if it does manage to get through that, we're looking at 20,850. So bias here is bullish for Nikkei as well. All right, so that's it for today. Before we wrap it up, just a reminder here, till the end of May here, I am offering a discount on the course to just support everyone through these hard times. Now, normally the course is $497. You can buy it for $197 at this point. And this will take you from the basics of Forex trading to more signature trade setups and stuff that I use, as well as we'll talk about risk management and equity management. In order to get the discount here, the regular price is still listed at $497 because this is just a short-term thing. What you need here is the coupon code. So if you go to tradingwithvenus.com, and either you can go to courses or you can just go to Forex here. Coupon code here is "we got this." So that's it for today. Have a wonderful trading week, and I'll be back again next week. Bye for now.